at Davos, there's a huge amount of optimism amongst industrialists, particularly American corporates, when it comes to the impact that Donald Trump's presidency could have on the American economy and what they think would be the spillover effects on the rest of the world. But there are some pundits who are signaling a note of caution, and primary among them, Martin Wolf, chief economic commentator at the Financial Times, is joining us now at the India Today Business Today studios at the World Economic Forum. Thank you very much, Mr. Wolf.
It's a pleasure to be with you.
Fantastic to have you back with us. You know, as I attend a lot of these sessions with American corporates, they're very rah-rah, gung-ho. It looks as if their animal spirits have been unshackled and they think that America will conquer the world again. This is going to be net positive for the US economy and for the rest of the world. Why are you so alarmed and concerned?
Well, first of all, I'm not surprised. And the one really important point is it's sort of business's job to be optimistic. That's what carries them through. Otherwise, you would never take the risk, make the investment. So the characteristic of a good business person is to be an optimist. And I like that. I'm wildly in favor. My job as an economist is to try and analyze, as far as I see, rationally, soberly, and looking at the pluses and the minuses. The second reason why they have a very understandable enthusiasm is that there will be a lot of deregulation, and that will allow them to do what they like without regulators and civil society actors who disapprove of them, all trying to stop them from doing what they want. Well, if you tell somebody of any age, just go and do whatever you like, well, it's fun, isn't it? Of course, that's much better than being told, but no, you can't do that, and you can't do that. But it doesn't always end up well. So just to go back to history, and I don't want to go a lot, but in the early 2000s, the Bush administration deregulated very significantly, and that followed on quite significant deregulation in the late Clinton era, particularly the financial sector. And in 2007-8, it blew up stupendously. And nobody said, by the way, we're going to have the biggest financial crisis since the early 1930s as a result of all this. So this enthusiasm of business, perfectly understandable, is natural, but could be very, very mistaken. And the second really important point, the US economy is already doing very, very well. It has full employment. It is the only major economy whose GDP is above its pre-crisis trend. It fully recovered, more than fully recovered, from the effects of the global financial crisis. Innovation is going gangbusters already. It is the world leader in artificial intelligence. Its tech companies are dominant. They've done spectacularly. So the idea that there will suddenly be some break in the trend, which they promised, by the way, in 2016 with the tax cuts, it didn't really happen. It seems to me very implausible. So I just think, I'm not saying there'll be a disaster. I can give you lots of scenarios in which things will go wrong. The fiscal crisis could emerge and so on. But it's
let's
naturable.
build on some of that. What all do you think can go wrong? Because you're listening to the positives about companies wanting to come and invest in the United States, America wanting to, push its way around and not be bullied or taken for a ride any longer. But build out some of the scenarios where you think things could go wrong and why.
Yes, I think this idea of America being bullied is a little strange for us in Europe to accept. I mean, it is the world's greatest power. It has been the world's greatest power for 100 years, and nobody's bullied it. What it wanted to do, what it did is what it wanted to do. What are the risks? Well, right now, unlike 4 years ago, the economy is pretty clearly at full employment. The Trump administration has a plan to remove a lot of workers. So it's going to have excess demand for workers. That's a natural. It's also plans to put on a lot of tariffs, which will pull activity away from workers from where they are to some other activity which is protected. They want to close the current account deficit, the trade deficit. That will increase demand even more. So there's going to be a huge boost in demand and a contraction in supply. To economists, that means inflation. It's very plausible that inflation will return, and obviously the Fed is a bit concerned about that already. That could mean higher interest rates. And then you have two risks: higher interest rates could slow the economy rather dramatically, but that may be less likely than that you begin to get real financial tensions. There's an immense amount of debt, public and private, right now. Public sector debt is exploding. It's well above 100% of GDP and rising. There's a lot of private sector debt as well. And the stock market is hugely highly valued. There are only 2 previous episodes in American history for the last 150 years when the stock market overall is as highly valued as it is today. If you add those things together, it's really not very difficult to imagine there will be quite significant shocks. And of course, the world is always unpredictable. There could be further conflicts, tensions, we don't know. But just looking at it now, the risk of overheating, and I should add the final thing, there could be quite significant tax cuts in this situation without offsetting spending cuts, which I think are quite unlikely. The fiscal deficit could get even bigger than 6% of GDP. And a fiscal deficit of 6% of GDP at full employment for a country that's growing 2% or 3, maybe 2.5%, that's pretty dicey.
You're saying that cuts in government spending are unlikely.
Yeah.
Trump now has a whole department with Musk in charge who are going to take the sword and slash government expenditure. Why do you think those won't account to very much?
Well, we're going to see. But the crucial thing is to understand the structure of the American budget. If you add it together, the core spending on health, social security, which is untouchable, debt interest, add all that together, you've already got more than 80% of spending. And the dominant part of the rest, overwhelmingly dominant, is defense, which is a little under 15%, of a sixth roughly of government spending. So you have to eliminate the rest, which is all the spending on support of science, most spending on things like infrastructure. They've just announced a huge spending on AI. Where's that going to come from in this budget? If you add it up, if they cut more than 1% of GDP on spending, it will be remarkable. Even 2%. Well, that will still leave them with with a fiscal deficit of 4 to 5% of GDP. The problem is that the only real way to cut spending is to cut the spending on the items that Trump's base depends on. And I don't think there's any sign that he wants to do that. So I just don't think the arithmetic doesn't add up.
Trump is talking about new trade tariffs. It's impossible to predict what he'll ultimately do, but he seems to be quite open to negotiation and conversation. So he can ask for 60% tariffs and then start a conversation. What do you think is most likely to happen, and what impact will this have on trade relations between China and the United States and the spillover effect on a country like India?
The honest truth is I have no idea. And just like with the spending plans, I don't know what will end up. I just think it'll be much smaller than they promised. Trump is opening a negotiation. What he wants in the negotiation seems to vary. Some of the things that he's wanting, for instance, vis-a-vis Canada, I just don't understand how they can be delivered. With China, it's not clear what he got a great deal last time, amounted to nothing, and we knew it would. So I have no idea what he's going to do. The key point, I think, about these policies is they generate huge unpredictability. And that won't stop just because you've got a deal. In fact, what's happening now shows that, because remember, in the previous administration, Trump, he reached a great deal with Canada and Mexico in the current free trade agreement, and now he's scrapping it. So the key point is it's transactional, short-term, unpredictable, and he might well start again. And that's the key thing the rest of the world understands. Now, coming back to your point, it's pretty clear the general orientation will be hostility to China, and that's an opportunity that the Indian government and India still can exploit. Though perhaps the Indian government should think, how successful can we afford to be? Because maybe Mr. Trump at some stage will turn on us.
You think he could? He's spoken of India as a tariff king.
You don't know. I think
he also loves Modi.
I think that of the countries that are vulnerable to Trump, major countries, India is the least vulnerable. So there I'm with you. But Trump is an unpredictable person. He can be a best buddy of you one day and you're out the following day. Just look at what's happened to the people who've been close to him. Look at the way he's savaging John Bolton. I mean, just taking a person now who was his important NSC advisor. So all I would say...
Will Musk and Trump coexist?
Well, that's a wonderful question. I've tended to assume there will be a blow-up because Trump blows up with everybody, and here's Musk sort of overshadowing him. But Trump may feel this guy's so big and so successful and so much richer than I am that I have to genuflect to him. But my assumption has tended to me that this won't last. But again, nobody knows. And this is relevant to business people looking at it generally. This is a very, very unpredictable guy. In principle, that's how he does business, because he's a completely day-by-day oriented person.
You were making the point earlier about how business people often tend to misread the situation, that they get aggressive and excited when these changes were happening. For example, when USSR was turning into Russia, and how they read it wrong. What are the parallels do you see in the two situations?
Well, I think that the US still has a much more established, fixed set of constitutional and legal arrangements. So policy in the US is, please God, more predictable than it turned out to be in post-Soviet Russia. So I'm not going to make that comparison. But the US is moving a little in that direction. I mean, Mr. Trump is very different from any president, except in the previous term, and he was more constrained, more bound by people around him, by institutions and his own ignorance. So now, Trump is surely the most unconstrained, and I suspect unconstrainable president that they've had, possibly at least since Andrew Jackson in the early 19th century. So it's just something you can't really rely on. But the US, I mean, the US will remain a hyper-capitalist society, that's very clear. Its business will continue to be very, very successful. There's no doubt it has huge resources. It's not like anywhere else, but the environment could be quite unstable.
Donald Trump has been ranting against BRICS. How do you see the rest of the world react to Trump's moves? Russia and China have already been trying to work towards de-dollarization, the creation of financial systems that don't depend solely on the United States. Will those trends accelerate because of Trump's economic nationalism?
That's a very interesting question. Donald Trump hates countries getting together against the US. So he hates the EU because it makes a lot of weak countries stronger because they unite. The BRICS are a similar threat. He sees the BRICS as a vehicle for Russian and above all Chinese power and influence, and the more they coordinate, because together they're big, the more it weakens the American position. So he wants to fragment these. And I think he'll work quite hard to fragment them, to fracture them. I don't think there's anything on earth he can do, particularly given he's not trustworthy from their point of view, to separate Russia from China. That alliance is now bound by very powerful self-interest on both sides. And I could go through it. It's obvious that they have a very powerful mutual self-interest. Now, the other people in the BRICS, well, it's more transactional. For India, there are things to think of on both sides. You want to be in every important place. So India might decide to do something different. I could imagine Mr. Trump going to India and say, let's do a great deal together. You leave the BRICS. I don't know whether he will, and I don't know what the deal would be. But you could imagine that. Brazil is another case. Brazil has historically wanted to be in between, but telling Brazil to cut all links with these other, very, very difficult. I know Brazil is very sensitive on this, but Trump will try hard. The question is, what can he offer these countries? I think he won't prevent people from trying to move away from the dollar. I do think that the strength of the dollar is likely to remain dominant for the foreseeable future anyway, because there's still no real alternative to the dollar. So he shouldn't worry so much about it. But this is one of those areas, these areas, where again the policy is just going to be messy, because he just doesn't understand the underlying economics of trade, currency. He just doesn't. And he doesn't have any advisors he listens to. He has a few economists around who are perfectly sensible, but I don't think he'll listen to anybody.
Let's spend a moment talking about India's growth, which has seen a bit of a dip in the second quarter, and the big debate raging back home is about whether this is temporary, caused by the election cycle, the cut back in government spending, and tight monetary policy, or whether this is more cyclical and structural. From your perspective, viewed at from the outside, where do you come out on this?
I think the honest answer is I feel quite uncertain about it, which is disappointing from your point of view. I've talked to a number of Indian economists. I think it also might be partly that this big post-pandemic boom just naturally came to an end. I think it's also pretty clear to me, having discussed this with some Indian economists I respect, that the Reserve Bank mishandled exchange rate management, and that unwinding that is going to be messy. But my big picture story is that if you look at the dynamics of the Indian economy, the uncertain world and so forth, I tend to think that we can't be confident of a real growth rate of certainly above 6% as really secure, and the Indian government will have to think very carefully about what it needs to do to maintain really fast growth, or ideally accelerate it even further. But I don't think at the moment.
Are you less confident about India's growth prospects now than you were last year?
No, I don't think. My long-term structural view has always been that the growth trend is in GDP per head, let's say, is 4 to 5. I still think that's pretty plausible. So I haven't changed that view. But doing that will require continuous reforms, continuous improvements.
So the big budget coming up, what reforms would you like to see most immediately from the government?
Well, one of the most difficult areas, the ones that I'm particularly interested in, is trade, because I believe, and it's going to be more difficult with Trump, that one of the things India has to do is to exploit the big trade opportunities that have been opened up by the decline of the difficulty with China, with the supply chains disruption. India should now, really has an opportunity now, to accelerate its growth of exports, and particularly manufactured exports, accelerate industrialization. I still think that's very important. There's an opportunity there, but it will require quite radical policies, and there's some risks in opening up the economy, cutting tariffs, really encouraging the integration of the Indian economy into the world system at precisely the point when actually the great superpowers are moving against it. And that's very important. The world environment, I think, for India too, has become more unpredictable and uncertain, and making that bet will be more difficult. Pushing harder on domestically oriented growth might be difficult. It seems to me most of the levers have already been used, and if you can't accelerate the dynamism on the external sector, growth may be stuck where it is now.
You've sounded many notes of caution. This has been a very insightful conversation. Martin Wolf, for taking our time and joining us at the India Today Business Today studios. Thank you very much.
Great pleasure.
Thank you very much.